Hi everyone, hope you're all doing well. Today I thought I'd try something a little bit different. Today we're going to look at what stocks the teens are saying could be potentially good buys. We're going to look at the trends, what teens are spending their money on, and this will reveal the most popular brands that are down with the kids, I guess. And yeah, I thought it was a bit interesting to convert this to stocks that are potentially ones that we should be looking at. So this all comes from Piper Sanders Talking Stocks with Teens survey, spring 2024 edition. I know the guys on the Playing Footsie actually normally do this on their podcast, but I believe they're actually not recording a video this week, so I don't think they'll mention it. So I don't think they'll mind me kind of taking this from them, guys. But yeah, it's always interesting to have a look and see what brands are doing really popular with teens, and could kind of suggest what's taking market share, and maybe some stocks to look at that are up and coming brands overall, really. So there's a lot of information. You can get the full information here, or the shorter version, which I've got here, and I just kind of picked a few things out that I thought was quite interesting, and I'll show you guys them anyway. So first of all, team spending was down 6% year over year, but up 1% from last fall, so that kind of falls in line with that. Everyone went on a tightening spend over the last kind of period, and people are starting to spend a little bit more money as inflation kind of comes down and pay starts going up. However, overall, that it's a lot tighter than where it was a year ago, is that people are spending a lot less money. It seems like even teens are having that going on at the moment. Nike, obviously a lot of people being interested in Nike stock at the moment. Nike stock has been struggling massively, as you can see here, down in the last year by 27%, and in the last this year underperformed the market massively, down 16%. I know a few people have been looking at as a bit of a buying opportunity. Financials have been pretty poor at the moment, though. That's the thing to say with Nike. And when you look at Nike at the moment with teen buyers, it is still the #1 favourite footwear brand. However, it is losing market share. It did fall by 190 basis points, or 1.9%, losing to other brands. So the other ones were the likes of Deckers, which is a very interesting company, a little bit cheaper, that would be alright. And another one that's been pointed out to me, this has got a funny story, this, On Holding. So you guys on the Patreon know that we should have done a stock request on that one, probably last time, and we'll have to do it again sometime. That's another very interesting brand that's up and coming at the moment, and they're taking a lot of market share from Nike, and that's definitely, I would like to have a look into that one at some point. So Nike's still doing very well, but it is losing market share to some competition out there, which is probably worth pointing out there. Next thing, Lululemon remains the #2 athletic apparel brand. Same again though, it was losing market share. So yeah, that is another thing that you've seen from Lululemon. I mean, if you actually do look at the revenue growth, Lululemon had a big growth period at the start of the what's the correct term? Is it the tens decade? And yeah, it's slowed down a little bit recently, back up to 20% plus growth. However, it's fallen down to the teen growth. When you look at the forecast they've just cut this year, it looks like they're slowing down once again. So it kind of shows that Lululemon is still doing very well, but same, a bit like Nike, it is losing a little bit of market share there to some other brands at the moment. So yeah, beauty remains a high priority. I agree massively. You know, you look at some of the beauty brands out there at the moment, they've been absolutely flying. So we'll actually come on to them in a little bit later on. Cosmetics still holds the highest share. Fragrance, however, is the greatest growth, 23%. Imagine that, fragrance growing at 23%. Was everyone just going around smelling smelling awful like the last kind of 2 or 3 years? What's going on there? Elf continued its dominance as the #1 cosmetic brand, and now it grew its share by 16 points year over year. So yeah, Elf is doing absolutely amazing at the moment, and the stock's performed absolutely amazing as well. Beauty consumers still prefer to shop in stores. This is interesting. So everyone talks about this online and people wanting to spend online. Seems like beauty still breaks the trend, and I think there's a few things is where we always talked about the online kind of taking market share and brick and mortar declining, but it seems to me we are getting more to the balance where we've kind of gone, the switch has kind of happened, and everyone that wants to go online will go online now, and everyone that wants to still go in store will go in store, and there's certain things that you'll still go in store for, and it looks like beauty is that people still want to go in store and get their beauty items. So yeah, it looks like beauty is still doing very well at the moment. This is a big one. Instagram made big improvements from fall 2023, up 700 100 basis points. Oh, that's impressive, isn't it? Up 7%. It's now the number 2 favourite app with 30% of teens. TikTok remained number 1, but declined. TikTok declining. Wow. And also Snapchat as well declining. So, yeah, I think this goes down to Meta. I mean, obviously, rebound wise, the share has rebounded in the last year, and I think the reason why is that they've adapted. You know, I always say I don't think Matt Zuckerberg gets enough credit. Competition has always come after Meta. They've always adapted the platform to the competition. You know, you look at the likes when the stories happened, Snapchat came out, and they added stories, for example. They've had TikTok come out, they added Reels, took a little bit of while to ramp it up, and now everyone kind of uses Reels on Meta. And Meta's and Instagram's a complete platform because it just has everything on there. It has Snapchat on there, it has TikTok on there, and then you have the whole Instagram side of it. You know, TikTok is probably a platform that probably will stick around for a decent while, I would say. But I just think Matt Zuckerberg and Instagram just pivot so fast to the competition that they'll just sort any situation out, and that's what's clearly happened once again. So yeah, well done to TikTok. Well done to Instagram and Reels for combating the competition there. Anyway, Chick-fil-A, the number 1 favourite restaurant at 16%, McDonald's at 10%. Wow, I did not expect that. But Chick-fil-A, I gotta say, I went to America last year, and I gotta say, I think I went to Chick-fil-A multiple times, and I did not go to McDonald's at all, so that does not surprise me. In our new category, measuring coffee, tea and beverages, Starbucks holds the overwhelming majority of the share at 37%, which is interesting, considering that I keep saying Microsoft, considering that Starbucks has had a big drop in the share price, just like Nike at the moment, but yet it still is the number 1 brand out there with teens at the moment. So yeah, Celsius, obviously Celsius is stock I own with the number 1 share. Celsius has number 1 share over the energy market compared to Red Bull and Monster, with 12% of the market share. So yeah, that's impressive. I mean, we know Celsius is popular, but the fact it is the number 1 brand with teens, and it's the number 1 play by a good margin, and yeah, really excited to see how they, you know, carry on expanding to like the UK and US for sure. Teams that consume or are willing to try plant-based meat hits an all-time low. I thought this was really surprising as well, with 32% in the spring of 24 versus 49% in the spring of 21. So this kind of shows you that all the plant-based stocks, and hey, you know, I had 2 of them. I should have only had 1 of them, to be fair, but it shows you like just things that you don't see happening. This still surprises me now, that the fact that teens you thought were more conscious about eating meat and meat alternatives, and they've all kind of just gone, no, we're not really bothered about that anymore. It surprises me massively to see that from 49% down to 32%. Like, really does surprise me there. And sometimes, you know, that's the investing game. Things happen that you don't expect to happen, and I thought teens would be more and more building up that they will be willing to try plant-based meats. The fact they aren't is really surprising to me. So that's a shock in my opinion there. And that leads on to the second slide, which is just an overall top 5 places or categories. What was surprising here, top shopping websites, Temu, 5th place. Temu, they're coming for your Amazon. That was up from 1%, I think 6 months ago, so that's nearly double, which is pretty impressive that they're ramping up there. Shein at 12%. If Temu can get anywhere close to that, that'd be really interesting to see. Top clothing brands, Nike still holding it up there. Top beauty brands, I mean, Ulta. I don't have a current beauty brand in my portfolio, and I used to have Revolution Beauty, and hey, it did really well. Like, I sold it out for like 90% gain or whatever it was. I keep thinking about getting Warpaint. It's a rich valuation, but the numbers are really good. The other thing's Ulta Beauty. Like, that's not a bad valuation at the moment. That's been hurt at the moment. Is that potentially one that I need to have a look at? It's a funny one, isn't it? Because you look at like Nike, you're like, oh, you're buying the dominant player, but at the same time, like, you got more room to be disrupted. So do you go for the dominant player, but you got more room for, you know, disruption, or do you go for one of these lower brands? But is it a trend? You know, this is a big thing with a lot of these like fashion brands. Like, you get one of these up and coming fashion brands, but is it just a trend? Are they ever going to make it to the top dog? I always think it's a little bit harder to invest in this kind of clothing and beauty segment overall. But yeah, so yeah, Elf 38%. That's crazy, isn't it? They've done really well, have Elf. I've got to say, I was reading this out to my girlfriend. I went top skincare brands. I couldn't even say half of these. I was like, I mean, obviously the Ordinary was alright, but I never even heard of any of them. Top footwear brands. I was quite surprised to see New Balance coming up quite a bit. That's good because I personally wear a lot of New Balance stuff, so it was good to see they were coming up. Top handbag brands. I was quite surprised to see like Coach up that much because I think it's Tapestry that own them, and Tapestry's been an awful stock. Top fragrance brands, as you can see here. Top hair care brands. Oh yeah, I was trying to say some of these as well. I couldn't say any of them. Food, Chick-fil-A at top, which I was really surprising. Raising Cane's is actually coming up a lot at the moment as well. I was quite surprised by the top snacks, as you can see here. Top entertainment, Taylor Swift. This is off topic. Here's one for you guys. It's not stock related. I've been saying this to a few people. Who do you think is more popular right now? Do you think Taylor Swift's more popular right now, or do you think One Direction at their peak is more popular than Taylor Swift right now? I keep having I don't know, it's one of those conversations that you kind of get onto randomly, and yeah, like someone always picks one, and I just think I'm going to cause a bit of a scene here, and I'm going to say no, it's obviously the other one. But what do you think? I don't know. Swifties are going mad, aren't they? But I remember One Direction, they were crazy. Anyway, and Adam Sandler, Drake, Ryan Reynolds, Kanye West, top influencers. I can't believe Kanye West is still up there with everything that's gone on. Netflix, YouTube, still the biggest daily video consumption, even though I believe they were down. TikTok is still the top social media website, but Instagram is number 2 at 30%. And top social causes is the environment at the moment, followed by inflation. So yeah, that is everything that's going on with the teen survey at the moment, and how that lines up for stocks and potentially popular stocks to be looking at, and up and coming stocks that may be taking market share. I mean, overall, the things that I kind of took away, I always find these interesting. Like, I would have never guessed that the plant-based big decline. I mean, obviously I've seen it financially, but to see it like that from teens, I was, absolutely shocked by. Things that I kind of thought were interesting. I mean, it was good to see Temu doing very well. Makes me think about Ulta, makes me think about getting a beauty brand in here, whether it be Warpaint on the UK side or something on them sort of lines. Looking at Nike, it made me a little bit worried for Nike, although it did make me think, looking at On Holdings, they've taken a lot of market share, which was potentially something that I need to have a little bit of a look at into that point at some point. Celsius, it was really good to see Celsius absolutely smashing it. It was good to see Starbucks still very popular with the teens. So yeah, Starbucks is definitely very interesting at the moment. And I guess the rebound from Instagram, obviously we've seen it. That one doesn't surprise me, because I knew as soon as Reels got going it would do. But 700 basis points in 1 year, that's a pretty decent recovery from Instagram right there. Anyway, so yeah, thought I'd share that with you guys. Some interesting stuff going on there. Anyway, I thought. So yeah, hope you enjoyed it. Something a little bit different today, guys, and I'll see you tomorrow.